What's going on, everybody? And welcome back to another episode of the Trade for Yourself podcast. My mission here is very simple. I just want to help you learn how to trade for yourself. Make sure you please subscribe. Make sure you hit that notification bell so you can be in the know every single time that I drop an episode or a piece of content. Look, I know that it's been a while since I have been consistent with the Trade for Yourself podcast. Well, I'm going to tell you right now, I am committed to now being consistent with the Trade for Yourself podcast because it's very, very important to me. It's very, very important to teach about the stock market and add value in that way. It's very, very important for me to teach you all how to learn how to trade for yourselves so you can make sure that you can add value to yourselves, your portfolios, your loved ones, the people around you. Spread the knowledge because it's very, very important. It's very, very important that we make building wealth a priority for our lives. And so I'm here. I'm tapped in. I'm putting content out. I'm here to make sure that you all learn how to trade for yourselves. And it's very, very important for us to do that. Trading and investing, that's the only way we can build wealth and actually have the financial freedom that we desire. And so for the reboot episode, it's going to be very, very simple. I'm going to talk about three things. We're going to talk about the S&P 500 being at an all-time high. We're going to talk about Jerome Powell testifying and talk about how President Trump has been wanting him to lower interest rates. And we're going to get into the charts. We're going to look into the S&P 500. And we're also going to look at AMD as well. Let's get right into it. All right, everybody. So check this out. All right. The S&P 500 futures are little changed as the index nears an all-time high. So it's very interesting that I'm starting back this podcast right when the S&P 500 is right at an all-time high. So the futures tied to the S&P 500 are down less than 0.1%, and the Dow Jones futures are down about 13%, and the Nasdaq 100 futures are actually a little bit higher. So the market today, the S&P 500 jumped more than 1% as oil prices fell on bets that the ceasefire between Iran and Israel could last. With that gain, the index now sits less than 1% off its record high, which is very, very good, very, very amazing. Now, the NASDAQ composite also popped more than 1%, and the Dow rallied more than 500 points. The NASDAQ added 1.5% to end at a record closing level. So we had a record level on the NASDAQ 100, which was very, very solid to see. Now, oil prices have cratered over the past 2 days, with West Texas Intermediate crude futures dropping 6% Tuesday. And these declines have helped lifted stocks. Now they've helped to lift stocks. The Israel-Iran conflict marks the latest obstacle the market has seemingly shaken off this year. Traders hope that a delicate ceasefire between the two nations announced by President Donald Trump would hold, even as investors worry about variables like a resurgence of inflation tied to tariffs and the strength of the consumer. U.S. stocks have continually rebounded from dips over the recent months. Now, the market continues to drive higher, said Joe Terranova, Senior Managing Director of Virtus Investment Partners on CNBC's halftime report. I used the word resiliency. I will use that word over and over again because this is one of the most resilient markets that I have ever witnessed. Investors will watch Wednesday for data on new home sales due in the morning. They'll also monitor Federal Reserve Chair Jerome Powell as he speaks before the Senate Banking Committee. On the earnings front, traders will follow quarterly reports from General Mills, Paycheck, and Micron. So when we look at all of this, the S&P 500 is hovering right around an all-time high. But essentially what's happening is that there's a lot of volatility happening. A lot of volatility happening. We've got conflict over in the Middle East tensions, so many things happening, but the S&P 500 is still chugging right along and less than 1% from an all-time high. Now, I believe that we're going to get to that all-time high, but do not be surprised if we get to the all-time high, reject the all-time high, and then come down a little bit just as a retest, right? To eventually get back to the all-time high and break above it and keep moving higher. But Based on how everything is moving right now, I believe that the market will continue to move higher. Now, we know that President Trump has been giving Jerome Powell and the Fed a lot of grief. He's been asking the Fed to cut interest rates, but Jerome Powell has said, no, we do not need to cut interest rates. And Federal Reserve Chair Jerome Powell on Tuesday emphasized the central bank's commitment to keeping inflation in check, saying he expects policymakers to stay on hold until they have a better handle on the impact tariffs will have on prices. In remarks to be delivered to two congressional committees this week, Powell characterized economic growth as strong and the labor market to be around full employment. However, he noted that inflation is still above the Fed's 2% target, with the impact that President Donald Trump's tariffs have had will still be unclear. Now, policy changes continue to evolve and their effects on the economy remain uncertain, Powell said. The effects of tariffs will depend, among other things, on their ultimate level. Repeating what has become familiar language from the Fed chief, Powell said policymakers are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. Now, the cautious tones could further antagonize Trump, who has ramped up his long-standing criticism of Powell. In his latest broadside posted early Tuesday on the president's Truth Social platform, Trump said he hopes Congress really works this very dumb, hard-headed person over. Now, Powell presented his comments along with the Fed's monetary policy report first to the House Financial Services Committee on Tuesday and then will appear before the Senate Banking Committee on tomorrow. Now, House members repeatedly asked Powell through the appearance the criteria for a cut, and he consistently said that it will take data through the summer to provide evidence that tariffs won't provide a prolonged inflation boost. We're just trying to be careful and cautious, he said. We really think that's the best thing we can do for the people that we serve. Asked whether pressure from the Trump White House was having an impact on policy, Powell repeated past assertions that politics has no role to play at the Fed. They're having no effects, he said, of the president's attacks, which have grown increasingly personal. We're doing our job, said Federal Reserve Chair Jerome Powell. So we understand what's been going on. We understand that Donald Trump has been having a problem with Jerome Powell because he has not cut rates in the way that Trump has wanted him to. But Jerome Powell is the Federal Reserve chairman, and the Federal Reserve is supposed to be separate from the United States. It's supposed to be an independent body. And so Jerome Powell is trying to hold that line. He's trying to do that, but Donald Trump is still on his neck, for lack of a better term. But I think that Powell is going to continue to hold his ground as long as he stays in this seat. But it's going to be very, very interesting to see how long Trump will continue to play into this rhetoric. It will be very interesting to see how long Trump will be able to play into this rhetoric. All right, y'all. This is the fear and greed index, okay? Fear and greed index. All you have to do is Google fear and greed index. It'll pop right up. It's the CNN business section, okay? And right now the stock market is in greed, okay? We're in greed, but we're at 56, right? This is rated from 0 to 100. So we were just in neutral, but now we're in greed and we're less than 1% from an all-time high. So what does that tell me? That tells me that I believe the market can continue to move higher, right? Because we're just in greed. We're not even in extreme greed. So it's something that we need to pay attention to. We have a lot of volatility, but the market's being very resilient. You know, Joe Terranova said it. He said the market's being very resilient. And so when we look at this, we see the S&P 500 is less than 1% from an all-time high. We see that we're in greed on the fear and greed index. That tells me that we can continue to move higher. So we want to keep a watch on this. We want to be paying attention to this because it's going to tell us a lot of different things about how we can trade, about how we can invest, about how we can feel about how the market is moving. Pay attention to this over the summer because the summer tends to be a very, very good time seasonally for the S&P 500 and also for the tech stocks. Now, before we get out of here, I know it's been a long time, but we have to look at the charts. And two charts I want to show you. First, it's going to be the S&P 500, right? Ticker symbol SPY, which tracks the S&P 500. Now, SPY closed at 606.78. We had a slight gap right here. We had a slight gap right here from Monday going into Tuesday. And so 613.23, that was the closing. We had a closing high of 612.93. That was back on February 19th. So it's been some months since we had a closing high on the S&P 500, but the S&P 500 is looking very, very bullish. It's looking very, very bullish, looking very, very good. You know, we had some bearish momentum. Bearish momentum. We had a death cross, the 200-day crossing above the 50-day. 200-day is in the gold. Okay. 50 days in the blue. So we had that death cross, but now the S&P 500 is moving very differently. It's moving very bullish. And it looks as if the blue is, coming up and that blue is eventually going to cross over that gold, which is telling us, okay, we're talking about a very, very golden cross. Golden cross when the 50-day crosses above the 200-day, indicating bullish momentum. The RSI is at 63 on this. So again, it's kind of in line with the fear and greed index in the sense that we're not overbought on this. So I believe that the S&P 500 will probably make a new high very, very soon, but we're going to have to pay attention to see what actually happens. We have a lot of volatility, but again, the market's being very resilient. The market's moving in the way that it wants to move. Essentially, fundamentals are driving the market at this time, which is very, very important. Last security I need to mention is AMD. Ticker symbol AMD, Advanced Micro Devices, the semiconductor company. Now, if we look at this particular security, this stock has been coming down, 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 down. Had a high of 227.30 and just been dropping off of a cliff since March of 2024. Now, we know that we've been in a downtrend. We know that AMD has not been performing the way that we would like for it to perform. But let's look at how it's been performing this year. So we zoom in a little closer. Okay, AMD touched $76.48. So we're getting very, very close to a double up on the security from this particular level. Now, what do we see? We see higher highs, we see higher lows. We just experienced a bullish engulfing candle on the daily chart. Bullish engulfing candle on this Tuesday, had a bullish engulfing candle on the 16th of June. We're getting into a situation to where AMD is getting to a seasonal period to where AMD continues to perform well. It will perform well in June. It will perform well in July. It's had price target increases. So now a lot of institutional investors are getting back into the name. The story is starting to change around the name. The company just had a very, very strong AI event where they just released new GPUs. So we're telling you right now, we understand Nvidia is number one in the space, but AMD is number two in the space, and the stock is going to continue to run. I'm telling you, you need to be involved in the security. If you don't have shares in the security, purchase some shares in the security. Leap calls out to next year. I recommend for the security. The stock will keep going. That's just how AMD does. It's a runner. It will continue to keep going, but you have to pay attention to it. Do not let this opportunity pass you by. As I stated before earlier in the episode, the S&P 500 is very volatile. But at the same time, with the volatility comes resilience. The S&P 500 is being very resilient and it's marching towards an all-time high. With the fear and greed index, we're at 56 just in greed. So the market is telling me that we still have higher room to grow. What I want you to understand is do not, I repeat, do not miss out on the opportunity. Insert yourself into the stock market. Insert yourself into the S&P 500. Get you some growth opportunities and grow your portfolio to make sure that you can make building wealth a priority for your life. As always, I appreciate you all for tapping into another episode of the Trade for Yourself podcast. Please like, please subscribe. Let me know in the comments what you think about the S&P 500 being at an all-time high. Let me know what you think the Federal Reserve is going to do in the future with interest rates. And let me know how you feel about SPY and AMD. As always, remember, don't pay for it. Trade for it. I'm tapping with y'all in the next episode.